Okay, good morning, everyone. Let me know that you can, if you'd be kind enough, if you can hear me and see my screens out there. Okay, good morning, everyone. Let me know that you can, if you'd be kind enough, if you can hear me and see my screen. Okay, thank you very much. Good morning, Sal and Mark, everybody that's out there this morning. We're going to get started in just a minute. All right, everybody, welcome to the 10-Minute Trades Trade Room, U.S. Retail News. My name is Lee Goldstein. I'm the Trading Director for 10-Minute Trades. Please remember that all trades are for educational purposes. It is possible to lose money trading futures. Trade carefully. And we're going to get started. I want to welcome all of our YouTube friends out there. We're streaming on YouTube. So if you like what you see, give us a like our channel. You could sign up for the channel and hit the notification bell so you know the next time that we'll be streaming. So retail has been a troubled report for the past quite a while. I say this, if you know me and you've been here for a long time, there was a day when retail was a great report. It traded with CPI. And that was quite a while ago, a couple of years now. When retail traded with CPI, it was a really, really good trade. You had two very impactful reports that exploded. Now, last month, we saw a little bit bigger move than normal on retail. We did not trade it. We're not trading it these days as a breakout because if you look at the results, it's only had 2 out of 6. It just has not been trading well as a breakout. Now, there is no PPI today. When the report got copied over, that was copied over from last month, sorry. So retail last month, we traded as a trap trade. And that's what I'm going to lean towards today. A trap trade is a trade where you think you're going to get a reversal. Now, the only worrisome thing about a trap trade is if there's an explosion in one direction, it'll stop you out because it'll just move in that one direction and go right through your stop. The idea of a trap trade, as you see here, the idea is if it goes up, it sells you. If it goes down, it buys you. So it's a reversal trade. So last month, it goes down just enough to buy. And then it went through. It looked like it was going to stop us out. Came very close. And all the news was agreeable. So I really wanted to get out of this trade pretty quick. There was a fair amount. You had PPI and retail. They both agreed, which does not lend itself well to a good reversal. So you're better off in that instance getting out. And you also had a very large downward trend in gold. And that can affect the trade because it was such a big move. Now, this morning, you don't have dramatically crazy volatile markets. Gold's like 19 ticks. The only worrisome aspect of using a trap trade is a lot of places are opening up. And the question is, how's retail doing? I think retail's probably doing okay. I think retail's doing okay because people are going out again and shopping and doing all the things they want to do, whether they should or shouldn't do them. That I'll leave that to the scientists. But they are, you can see pictures of people doing things all over the country. The month before, you had quite a bit of news. You had PPI, Empire State. There was a lot of news. And it's hard to use that as a test because there's too much news. But it's always interesting to see what's going to happen. Now, we were looking at the ES for that breakout trade, and it did not work on the ES in SIM, fortunately. And it just wasn't quite a large enough move for a reversal. Even though there was a lot of news and most of it was agreeable, the gold reaction was small that month. It was not a powerful reversal-based move, so we didn't really have a trade there for a reversal. The ES can be inconsistent on this type of news. Sometimes you can get a great move out of it. Good morning, Mike. Sometimes you can get a difficult move out of it. Let's see, December. December retail traded by itself, which it's doing today. And it looks like, you would have had the ES, looks like it might have worked at least for one target. Whether you would have hit both, there might have been some slippage. And you can see gold, though, which is normally what we trade, is troublesome. See, we haven't been trading retail because it's been behaving so poorly. But we traded the trap trade last month and it worked. So probably give it another shot. Because the trade's been behaving poorly, the reversal possibilities for a trap trade are good. So December was a strange trading month. And then November, you're fine, Chantal. And then November, you had retail news, you had import prices, export prices, which is sort of a trade balance. ES on the left, gold on the right. And ES, we got out early because it looked like the trade wasn't working. And then gold kind of sitting again. Gold's just kind of sitting again. So the concern is if retail news is very good, you want to make your orders for the trap trade reasonably sized. In other words, if they're 5, you're never going to make your orders small. The trap trade, in other words, here we have a trap trade setup where our tiers, think of the word tier as order. It's the position on the chart, and it's 10 to 12 ticks away from the current price. And tier 2, order 2, is 20 to 24 ticks. And the stop is 15. If you think retail is really going to move strongly, you can increase that first tier to 17. The worst that'll happen is maybe you won't get filled if it's not a big move, and you just won't have a trade. But if it bursts, it will help to protect you from a burst through your stop, because it'll have to go further, because it's further away from the entry. So if you think retail news is going to be really, really good, and there was a sign last month that maybe the movements are growing because it moved 35 ticks. So it won't hurt you generally to make your tier a little bigger. It can help to protect you. So I'm leaning towards like a 16 tick tier, 17 tick tier, and a 24 or a 23 on my second order. That way, if it pops and hits them both and then reverses, you have a nice shot for a reversal there, and the stop is 15. So it's funny. This report was abysmal in 2020. So look, you could not trade this report because it hasn't shown that it's behaving, if you follow me. So there's nobody that says you have to trade a report that doesn't have a good trading history. That's pretty rare for a daily report to say something. The report was abysmal in 2020. I'm not crazy about the ES. I mean, there are some trades where the ES worked with a 7-tick bracket and a 10-tick stop. But you could see also that it was somewhat inconsistent. So if I were going to do anything, I would either watch and, let's see if the trade is going to start behaving itself again, or I would do a trap trade. And you could use tiers of 17 and 24. I don't think that's unreasonable. And if you don't get filled, that's fine. It's not the end of the world. But the idea is the possibility of protection from a really large move. A really large move, you probably wouldn't never survive. But a reasonably large move, if your tiers are big, then you have a chance to survive. Okay. So there's rules and ways that you set up the trap trade. It's a little bit different. It's different than a breakout trade. and it's separate also. So you choose trap trade. Now, the first rule that you should know on a trap trade is the entry time is the exact time of the report. So retail's at 8:30, so your entry time is 8:30. Now, our testing, you have something called order preparation seconds. That puts the orders on the chart that amount of seconds before 8:30. I never take 45 seconds. In fact, I use very little. Our testing showed that on retail, you want to use very little prep time. You want to be fairly close to the report because it can affect the center point, which will affect where your orders go on the chart. And sometimes there's a bit of movement before the trade. So you want your tiers to be set up well. And then I was saying, because you're thinking there could be a big move, because retail could be strong, your tiers, your orders that are placed on the chart, 17 ticks and 24 ticks. Contraction gets ignored. It's a feature we never implemented. The bracket center is always price at the time. Positions, that's just like our normal setup. It's 1 and 1. I'm using one position for 17, one position for 24. The average price bars is default, and the wait for spike is default. The wait for spike, it just always puts a stop on the chart. Our old version of the trap trade used to not have a stop, and when we rewrote version 2, we put a stop on that's like an emergency stop that after 5 seconds, it then puts the normal stop on the chart, which is 15. It's just so you're always protected. The stop loss position is based on the last fill price. We don't base it on averages. You base it on the last fill price. So going down from the top, the bracket center is price at the time. Position 1 is 1. Wait for spike, the default is 5. You just leave that at 5. Position 2 is 1. That's the number of contracts. Position size. Average price bars is default. You leave that at 10. Stop loss position is last fill price, not the average price. The stop loss on this trade is 15. Cancel, I would probably cancel. You can tell with a trap trade if you're going to get filled. If you don't get filled in the first 10, like a breakout trade, retail should move and fill you pretty quickly. So if I don't get filled, I probably wouldn't go longer than 20 seconds. I'd probably cancel. And then our entry time is 8:30, like we said. And the order preparation will actually put our orders on the chart 15 seconds early, because the trap trade, you're allowed to adjust your tiers around support and resistance if you have the opportunity. And there are some trap trade videos that I promise, I hope I'm going to get them posted today on the member website that explains a lot of this, because we never have done trap trades until recently. It's been a very long time since we did them. So very few people are familiar with them and how the strategy works. So we need to post the videos so you can watch them and learn about the strategy. But from a basic standpoint, it's a strategy that expects the price to reverse. So when it goes one direction, it fills you in the opposite direction in the thought that it's going to reverse, and you take your profits on the reversal move. So 15 seconds early, we'll get our prep. And let me show you the trap trade. I only did one order last month. In other words, you could do just one tier if you want to. And there's a couple of buttons that show up. You have a cancel the outer tier. You have an adjust button. And that's if you have movement before the trade. You can hit the adjust button and it will help your fill to be placed better. And then close the trade. Those three buttons show up. Cancel the outer tier is exactly what it says. It cancels the outer order. If you feel like the trade is not going to move enough to get to that outer order, you cancel it. Going to check our time. By going to the website time.is. And my computer's in sync. It puts me in sync. So let's look at last month one more time. I did one tier on the trap trade, or maybe not. Did I do two? Let's see. So 30 seconds I used. My orders showed up on the chart. And if price goes up through that first order, it'll sell. If it goes down through that tier, it'll buy. So the idea is reverse. The news came out, it went down, didn't fill me, went down again, filled me. But there was a lot of news that day. When you do a trap trade, actually you want to see mixed news, or exact news is very good, because then you get a higher probability of a reversal. And that one, we just grabbed 6 ticks. My concern was all the news was agreeable. A huge move in gold before, a huge trend in gold. So it made sense to get out of that trade early. So this trade, one more time so you can practice. You don't use contraction. Bracket center is price at the time. One tier for 17 ticks, one tier for 24. And then the wait for spike is a default. Has to do with the stop stays on the chart for 5 seconds before it moves. The stop loss position we use is the last price. We're using a stop of 15 ticks. And remember, the tiers are 17 and 24. Entry time is 8:30. Order prep is 15 seconds. My orders will show up on the chart 15 seconds before the trade. Now, I have seen I have seen trades that it looks like you're going to get filled early. If that happens, you hit the close button and it shuts down all your orders. That's the fastest way to shut down all your orders. So if I saw all my orders show up and I felt I was going to get filled early before the news comes out, I would hit the close button and shut my trade down. I don't want to get filled early. I mean, that's our general rule. We don't want to get filled early in any trades. Okay? You want to get filled after at the time the report, we're trading the report, so we don't want to be in a trade before the report. That's not how we do it. So what'll happen is when the clock gets to 8:29:45, 15 seconds before the report, my order preparation will show up. Now, for instance, if my top tier is under the R1 by 1 or 2 ticks, I might move it above. And you don't panic. Sometimes you don't have time to do any changing. I've taken a million trap trades where you had no time and the trades worked fine. If you have the opportunity to place your orders in a better position, you can do that. With retail, you don't want to take a lot of prep time because it can throw off the positioning of the trade, because there can be a lot of pre-trade movement. Smaller trades, you can take a longer amount of time to prepare your orders. So I'm just thinking, you never know. I was just thinking, do I really know that the retail news is going to be excellent? I don't know that. I'm not sure. I'm watching the ES on the right. My gut feeling is the retail news, because so many people are out and about, the news is going to be okay. That's my gut feeling. And for the past year, this report, it just hasn't been a very successful report. So we got about 2 minutes to go. And remember, 15 seconds before our orders will show up on the chart. And they're expecting retail to be a little bit negative. My gut feeling is a little bit, it's going to be positive. So it's pretty quiet before the trade. So my orders are going to show up in a couple of seconds. See, there's my orders. Those are my tiers. Those are called tiers. And the orders are too far. They're actually well placed. I don't see a need to move anything. The news comes out. It's a little bit mixed, which I like to see, but I don't think we're going to get filled because it's just not a big enough move. So I would cancel this because it's 20 seconds and you just don't have a big enough response to make it a valid trade. Okay. So I cancel it. Now, you're just chopping around. The news is negative. Okay. Now, if gold is moving up, it would not have been a very strong breakout trade. Okay. It would not have been a very strong breakout trade. Maybe it would have hit that first tier eventually. Now you can look in the log and you could see it's very choppy, which is good for the type of trade we were doing, but it just wasn't moving enough initially. And you know what? With the trap, I'm trying to see if it puts our orders in the log. I was doing some testing earlier. So no, you know what? It's funny. It doesn't, on the breakout trade, I'm going to have to talk to the programmer to see, or you can write down where the order would have been. Mike, did you get filled? Where'd you get filled? So you got filled at the top. So, hey, look, for us, how long did you stay in? I'm just curious how long you stayed in. And it's all a question of how you think the report is behaving. So he got filled right in this area, 1734.20, and got an excellent reversal. So at 38 seconds, it was only a couple of seconds. I went about 20. Normally, if retail doesn't move, it's very random as to what's going to happen. Usually, I mean, honestly, the way you want the trade to work. Now, Mike, I'm happy, of course, that he made money. That's awesome. What you want to see happen is a pop or a drop based on the news. When we had virtually no reaction, for us, our proper way of trading that is not to, because we didn't have the reaction. Mike waited and just sat in the trade a little bit longer, and he had a good trade because it went up, hit his tier, and then drop down. Now, look, you could take that chance. You just don't know. You just don't know in this type of trade. Normally, you expect a little bit quicker. I expect a little bit quicker fill. Oh, Chantal, Chantal did a lot of testing on this. Chantal, how quick were your fills in general? Weren't they quicker than 20 seconds in general? This was a very small move in 6 months. And that's what led me not to stay in. We had discussed the testing on this, a lot of the testing. So I was expecting, with retail, I was at least expecting a pop or a drop. And we really didn't get it. And that's the reason why I didn't stay in the trade. Now, of course, you can get a break and you could get, you got to move up, and then it came back down. It's really random. That was more random, not necessarily based on the trade data. I was looking for a trade based on movement from the data. We didn't get movement from the data, so I don't take the trade. That's just the way that we do it. Anyway, I want to thank everybody that watched us on YouTube. If you'd like to sign up for our channel, we stream at least 4 times a week. We stream our trades. And for Trade Room members, we'll be back at 12:30 today for the 20-year bond auction. Okay? So we'll be back at 12:30 for this 20-year bond auction. So I'll see everybody in a couple hours. Of any questions. So look, if I was going to do this over, I would still do it the same way, because the idea with the trap trade is a pop or a drop within a reasonably quick period of time. And that generally is within 10 to 20 seconds. But very nice, Mike. Glad you made some money. And everybody, I'll see you at 12:30 for the 20-year bonds. Yeah, okay, Chantal. I'll meet you there in a minute. Okay, see everybody later.